difficult to do. Humans aren't hardwired to do it. We tend to rely on a system in our brain which sends information very quickly to an area called the amygdala, which controls our emotional responses, fight or flight. Investors have a tendency to rely on this. Investors have a tendency to not do their own research. So when faced with a financial crisis or an ambiguous situation, they start looking to others to see what to do. This leads to hurting and contagion in the markets. So number one, you have to do your own research. You have to. That's the only way you'll have the fortitude to stay in an investment. If you're not going to do your own research, then you need to hire a good manager and stick with that manager. So I would also say that you can condition yourself to view market volatility as an opportunity as opposed to a setback. And the only way to do that is to put money to work in a very scary period and reap the benefits of that. That conditions your brain that instead of being fearful of those events, the next time one occurs, you're going to be anticipating the reward at the other end, and it becomes more comforting. Also, we keep a wish list of securities in our desk drawer. So did Uncle John. Companies that we love that aren't attractively priced at the moment. And during really scary periods in the market, we pull out that list. And instead of focusing on the money we've lost, we switch our train of thought and start focusing on the opportunities in our desk drawer. And that's a very, very powerful thing. You will not believe how that changes your perspective. When all of a sudden you pull out this list, it's your survival guide to a financial crisis. You put it together when you were thinking logically, when you weren't scared, and now you're going to start putting it to work. It's very calming.
Absolutely. No, I think you covered everything there.
So in a way, a checklist approach to investing.
Yeah.
And the conditioning and the experience that comes from, as Lauren described, getting the positive benefits.
Yeah, experience matters. I mean, I know I say that as a young person, and older people probably roll their eyes, but I have been investing for a long time for someone in my age group. And I can remember as a younger investor being very upset by market volatility, very upset when I had a drawdown in my fund. I mean, it made me physically ill. And now it just doesn't even faze me. I mean, I literally get excited when I see negative news headlines. They make me happy because I think, oh, look what a wonderful gift somebody has given me today. Now I can buy this stock for a low price, and I can compound my investors' money at a higher rate of return. And that has really just been through conditioning and experience.